What's going on YouTube? Appreciate y'all tuning in. For today's video topic, we're going to be talking about how to invest into the stock market 2025. Now, the first thing that you want to do is you want to save to invest. So you want to be able to set out like a savings goal, say for example, $1,000. And you want to put a time limit. You want to set smart goals, specific, measurable, achievable, and time bound. So yeah, something like that. Don't quote me on that. But the first thing you want to do is set a savings goal. So for easy numbers, for example, it's just that 1,000. Once you hit that 1,000, in the meantime, while you're saving up, you could be doing research on companies. You could be doing all that kind of stuff. It doesn't have to be $1,000. It could be just any amount. The main thing is just to have a goal. So once you have a goal in mind, just set up your goal, and then once you hit that goal, then start distributing that money into the stock market. I recommend is that you set up like automatic transfers for the savings goals. Don't be doing it manually, because first of all, it's like you gotta do all this work. You gotta every time you get paid, you gotta go look and manually put it in. That's not gonna be, I don't recommend doing that. What you wanna do is just set up automatic transfers. What you wanna ask yourself is, what's a dollar amount that I could commit to that is not really gonna affect me? That it could be $50 for some of y'all. So some of y'all it could be 500. The more the better, because you're really investing in your future and stuff like that. So that's just something to keep in mind. So yeah, so once you've hit your savings goal and stuff like that, so for example that 1,000, now you want to decide which platform to use. You got Robinhood, you got Webull, you got Charles Schwab. There's plenty of platforms you could use. You could even use Fidelity. There's plenty of platforms that you could use to start, investing and stuff like that. They all got different perks and purchases. If you want me to do a review on any of those platforms, just comment down below. Let me know your thoughts and stuff like that. Hey, be like, e.dabeast, can you do a review on Fidelity or whatever? Just let me know. Comment down below whatever platform you want me to review, and I'll do that. I'll make a video on it, if enough people, go down. Now the next thing, so like just to recap the first points, you had the savings, you set up a savings goal to hit, you decided on what platform to use. Next thing is, what I recommend is you want to invest in things that you already know. The next thing that what I recommend is to invest in stuff that you already use. Like for me, I have a lot of Apple products, so that's what I invest in. I invest in Apple. Apple's been a great company for however long. So that's one thing. I use Amazon as well, so I'm investing in Amazon. So that's a simple strategy and stuff like that. You want to invest in blue chip companies. What blue chip means is companies that's been here for a while, and they've had they're pretty much established. That's what you want. When you hear somebody say blue chip, that's what you want to think about, is that pretty much those companies are established. So that's literally what I do. So I invest in stuff that I already know. But if you're a complete beginner and you don't want to pick individual stocks, or you want to be able to mitigate the risk, or if you're thinking about just buying a bunch of stocks all at once, I recommend you do either ETFs or index funds. Because with the ETF, you're pretty much buying, like, depending on the type of ETF that you buy, you're pretty much buying like all the stock shares in all the companies and stuff like that. But if you guys want me to do a video, I could always, again, comment down below if you want a video breaking down like the indexes, VTI, just comment down below and I got you. Once you save to invest, decided on the platform to use. I'm gonna give me one more. I'm looking at my notes here. And you're investing in what you already know. Or if you don't want to go that route, you could just do an ETF or index fund. You've hit your savings goal, decided on what platform to use. It really doesn't matter. Don't overthink it. The platform thing, don't overthink it. Whatever resonates with you, whatever is, just pick with that one and just stick with that. 3 is either decide to invest in what you already know. But as a beginner, I wouldn't recommend investing in individual stocks. I would invest in index funds or ETFs. There's like a truck coming by on. Hopefully y'all didn't hear that, man. Hopefully the sound is good, man. Sound check. All right, should be good. Hopefully it's good, but it is what it is. Yeah, so I was saying, I would really recommend that you invest in either index fund or ETFs and stuff like that, because what ETF stands for is exchange traded fund. What it pretty much means is you're pretty much buying like most of the companies with just one payment. If you own one share of that, I could do like a more in-depth video breaking down like the ETFs. Should you invest in ETFs or index funds and stuff like that as a beginner? Just comment down below, and I'll be able to provide that to you guys. Now, the last and most important thing that you want to do is to set up automatic transfers. Like I said, you want to think about what's the dollar amount that I could commit to, that I could do each and every month. For some of you that might be 50. For some of y'all it might be 500. For some of y'all really balling, shall I call it might be up to 5,000 and stuff like that. But really, what matters the most is just being consistent. If you're consistently investing in the stock market, dollar, we call it dollar cost averaging, you know, and you could DCA, or you could DCA either on a monthly, weekly basis, whatever it is, whatever strategy you decide to go with. But that's just the main thing, man. But that's the video for today, man. Appreciate y'all tuning in. Don't forget to like, comment, subscribe. Peace.